let's go through the confirmation. On the weekly time frame, we see the market tested a support level. On the daily time frame, we do see that they had a bullish engulfing. On the 4-hour, we do see the break of structure, right? Okay, so that means that we are definitely taking up that trade in the right direction. On the monthly time frame, we also see that it is respecting that level of support. So back to the 4-hour time frame. Let's take this off, as not to get ourselves confused. So what do we have? We have this push over here on the, let me use this arrow. So we have this push over here, and then we have this, I guess you can count this as a pullback, since market broke this I guess level of support, you can call it. But anyway, it created a bullish engulfing, and it created a bullish engulfing. So that means there is some kind of downtrend structure being formed. So then that means that it can be counted as a valid pullback. Even though using our fibs, it is not a valid pullback because we did not get the 38.6%. However, we have the 23.6%, so that is a strong, that means a trend continuation, right? So we are possibly looking at it to go to this 41.8%, which can also be the 50%. Oh, sorry, excuse me. No, it's kind of, which is here is the 50%. Okay, on the higher time frame, we can confirm that, right? We have this 50% right here. Okay, so we can target this area, or we can target above it. Personally, I guess this area would be the best because we have this this resistance level right here. Let me draw it out. Okay, we have this resistance level right here. Okay, previously respected support, 10 resistance. So we can definitely look to take off our trades down here, and then we have this 41.8%. So that is confluence. So that is a good area we can take off our trade. Now we already have everything confirmed on the. We have everything confirmed on the H4 time frame, right? So now we can drop down to that H1, because now what do we have? We have market pullback. We do see that there is some kind of break in structure on the lower time frame, right? So what are we going to be looking forward to? We're going to be looking for the trend to continue back up, to follow that trend on the H4. On that H4 time frame, we know that the daily is in an overall bearish trend, but it's currently on a pullback. So we're following that. The H4 does align, the H1 aligns. So when we somewhere down here, we somewhere on the 30 minutes time frame. Okay, somewhere on the 30-minute time frame. Let me go back and then reference exactly where I took my trade. So that is perfect. Okay, so now what do we have here? First of all, we have this confirm that, hey, market is going back to follow that H4 trend, because again, we are on the pullback on that H4, which is this point right here where there is this bullish engulfing. So we're waiting for the H1, and basically the lower time frame, H1, 30 minutes, 15 minutes, 5 minutes, to follow bullish, and then now we can take advantage of that trade. We have this bullish engulfing right here. Which also means there is some kind of break of structure on the lower time frame. So on the 30 minutes, it is kind of visible by this let me go bring out this tool again. But here we can notice that break of structure right here. So market broke above, created those candles which confirm that there is a break. So you can even drop down to the 15-minute time frame to confirm that. So you see we have this minor level right here. So if you look in, you could possibly like higher high, higher low, higher high, higher low, higher high, low, right? Low, high, high, low, right? It's starting to change in that structure. It created this low and then started breaking down. Okay, so it created this internal structure, I guess not on this time frame specifically. However, it is visible somewhere here. So it's just a level that you can keep your eye on, right? And then we can kind of measure that out a bit as well with our fibs. Okay, because market formed this support, so we will want to see, hey, is this a valid, pullback? So we can put it somewhere here, drop down to the 5 minutes to see more details. Okay, and then we do see that market tapped that 38.2%. So once we see it, we always keep a look at it. And then what do we see over here on the 30 minutes? So what happened was price broke above that point, came back, and then tested that same level. So once you see market test the same level right here, we are going to use our toolbar for this. So this exact level right here. So we can consider this like a previous, previous resistance. So it formed a resistance point right here, and then it turned to support. So when you trade in, you just want to keep just mark these levels out and then keep your eye on them. When you're on the lower time frame like this, when you have everything confirmed, once market comes back, and then it's respecting that level, we can possibly look to take a trade then. Okay, so we drop down to the 15-minute time frame. We do see that market from this price action here. So if you want to go a bit down to kind of break it down, that is perfectly okay. So we take our trading tool, we put it right here because market, when we analyzing on the M5, markets created this support level, went all the way up, came back, created this lower high level, and then created this price action signal. Okay, so now we take that trade over there. That's an entry signal. So let's see exactly where I entered. Okay. What does it show that's different? Let me compare it. Okay. Sometimes this charts can be a little bit all over the place. However, I took my trade, I believe somewhere. Oh, excuse me. So I believe I took my trade somewhere. Oh, come on, not again. Oh no, so I took my trade somewhere here, about where that 5 minutes entry was at, right? So that matches. So personally, I like to come on when I'm setting up my stop loss, I like to come on the M30. Okay, so I believe my stop loss was about 40 pips, so somewhere down here. Let's compare it. And yes, exactly. So when you repeat this over and over and over again, it just gets like that. So where is my target for this particular trade? So for this particular trade, as we did discuss before, you could have possibly just target this 38.2%. Okay, made out with 100 pips, which is good, made about 2.3 times your profit. But I was personally, my overall target was this point, However, I was happy to take off my profits somewhere in this zone, because well, on this particular trade, my overall target was here. I could have gotten out of this trade. Um, Once I saw this price market signal on the lower time frame, when this level started to break right here, I could have gotten out and then made off with some money. So I could have gotten out at this point, right? But since I was targeting somewhere here, I had the confidence to hold this trade. But keeping notes to me, for me personally, once the trade broke this level, let's pull out my tool right here. Once the market broke this level, I was going to get out. So if it, printed a bearish candle here and then another bearish candle, I was closing out my trade. Okay. So as market started to pull back, if you did not target that zone, as I did not target it, I still had my fibs. So now I went on the H4 now, but on the H4, what I see is market is holding up its trend. We do have this kind of bearish engulfing here. But again, remember what I said before, I'm looking for this candle to break. I'm not looking for the first break of structure. I'm always looking for the second break of structure. I will look at the first break of structure if I'm thinking aggressively, but I like to be a little bit more consecutive. However, you are going to see that aggressive move right down here. So what I did was I just pulled up my fibs over here. Okay, and I saw markets did not actually test this level. So I mean, as we have some kind of pullback here, I just took that off, kept a note that this is a continuation, right? And then this is my next fib area. Okay, so on my next fib area, now we are on the H1 time frame now. Okay, because market is confirmed to be on that bullish. On a bullish trend, we have a change of trend on the lower time frame. Right, we have this, but we're waiting for this to break. I mean, you can always look at it on the higher time frame, but you can switch between time frames. So as this candle is forming, as this particular candle is forming, I am on that lower time frame, and then I'm watching it form. Okay. So what do we have over here? So right on this close, at the 4-hour close of this candle, of this bearish candle, I was on that lower time frame. And what do I see? I see this bullish engulfing right here. Right, so again, remember, bullish engulfing on the lower time frame means that there is some kind of trend change. Okay, so I just drew up my line here, went on that lower time frame, and then guess what we have? We have some kind of trend structure trying to change in the trend. Okay, now I'm not going to enter my trade immediately. Okay, I'm not going to enter my trade immediately, but what I am going to do is I'm going to drop down to that 15-minute time frame, and I am going to wait. I am just going to wait. Okay, so now what do we have on this 15 minutes time frame? Okay, so on this 15 minutes time frame, we have price attempt to break this, but it doesn't actually break. We're gonna drop down to the 5 minutes because we are already in a trend here. Price did not break this level, and we're looking to take buys. So in this case, dropping to a lower time frame would never be a wrong thing to do, right? So what I do, I pull out my fibs. Okay. Now, market doesn't actually break this point yet. We have a test. We're waiting for that trend break. This is the actual trend break right over here. Okay. However, what do we have? Okay. We have market start to basically form this price action signal, up, down, up. So lower high, lower low, okay? And then market started to form its what? Higher low. Higher high. Market started to form its higher high. And then once market formed this lower low, I was just looking to get in because market formed this low. We have this level being respected right here, this small level of previous resistance turn support. So once we see this price action signal form right here, we are able to enter the trade again. So we can compare those entries as well. Okay. And then as we see, they also kind of match up as well. So again, we targeting those same levels. Okay, so if you want to be more consecutive, you can always target this level, which I did. I took off some of my trade at this level. I believe some trade at this level. Okay, so I took off some trades of this and some trades of this to secure some profits as markets came back here. Because what you can have happen sometimes is for market to go up and then test this level and then just drop down. Okay. So once we had that market go up, what are we waiting for now? We're waiting for market to keep trending up, right? We're waiting for market to keep trending up. However, what happens over here? Market doesn't keep going up. It had another pullback. So now when market made this pullback, all I was thinking in my head is, this is the actual pullback because we caught the first, we caught this entry right here on a continuation. So market actually never made a pullback on the H1 or the 30 minutes, right? So we just caught that pullback on that 5 minute. We caught the continuation on the 15 minute. So that is completely okay. Once I realized that market was making this pullback, what did I wait for now? Now, what I waited for on this time frame, I was waiting for this to break. This, let me use the highlight tool as that will be better. So I was waiting for this point to break, right? However, that point never broke. But what do we have over here? Okay, when I drop down to the 30 minutes, I do see that market formed this level of resistance. Okay, so on this 30-minute time frame, market formed this resistance level, went up, came back down, formed a support on that level. So once a support is formed, you can always enter the trade again. And then let's compare exactly where I entered. Nice, exactly that point where market broke, because that's a price action signal. So market broke this point right here. So you can take this confirmation or just wait for this pullback. However, I knew I was going to be asleep right here. But again, I just took my trade right here. If I woke up and I saw my trade had broken this point, I was just going to exit the trade. Okay. So I took my second trade at this continuation right here once market broke, right? Because I was expecting market to keep going up. It was already late, right? So I know that, okay, if market doesn't break this point, it's just going to go down. But however, there is a high point that market is going to break, retest, and keep going. It's always more advisable to enter on the retrace. So if you could have waited, you could have entered right on this candle, or waited for that second pullback and then enter right on this candle. But personally, once I saw this candle broke above here, because again, remember, we have this pullback, market formed this resistance level right here, market from this resistance level right here, right, broke that resistance level. So we are in, we can just enter, and if market breaks this level, we are out of that trade, which is exactly what happened. Markets kept going up, markets kept going up, markets kept going up, right? So I took off some of my trades at this resistance level here, but markets kept going up. Actually, there was no reason to take it out because we had a strong bullish candle over there. We didn't have any kind of change in lower lower time frame trend. However, I did take off all my trades up at this point, up at this very point. I believe 1869, yes, somewhere there. Why did I do that? Because market was struggling a bit. I dropped down. I saw this. So I was like, you know what? I am okay with my profits for today, and I worked out with my profit about 4,000 on my FTMO demo, and then about $50 on my $100 demo account, which is going to be a real account soon. So we'll see how big we can build that up. And then lastly, for my trade, my stop losses for these trades. So I did realize I did not talk about my stop loss for this particular trade right here. Okay, so we did get that entry. After that entry on, I believe, the 5 minutes, after that entry on the 5 minutes, okay, we would look to put our stop loss. Our stop loss was 40 pips. So so I look down here because market found some kind of support right down here. So if market breaks this level, I am looking to take my trade down. So about 40 pips. Let's compare that. Okay. So as we can see over, compared to my original trade, I believe I did do a much aggressive entry. So basically somewhere down here. Okay, so when markets kind of confirm this pullback over on this point, let's see, let's compare that again. What was that level? Let's compare with the price level. Okay, so that was 1857. Let's see, 1857 would be somewhere down there, 57. Okay, so basically this was a much aggressive entry. Now this entry would have been the best entry because we have that lower high points clearly print right down there. Okay, but as I do see, I did do a much aggressive entry, so I believe I was down on the M1 time frame. That is the 1 minute. Okay, so on the 1 minute time frame, we do see that let's zoom in a bit. Okay, so we do see that market broke this level, came back down. Okay, and then market broke above this level right here, created this bullish engulfing, this uptrend structure, did 100% pullback on this particular trade. Okay, so when market started going up, I went back on the M5 to compare it, and I did see that market did hold up that point. So once market held up that point, I am good to take a trade. Okay, so let's go back on the 1 minute right there. Okay, and then we see price engulfs this level, creates this minor support level right here, and then I am in. So my actual entry was right there. Okay, But looking at this chart right now, the best entry I could have taken was just this first entry we have. Was this first entry that we had on that breakdown of the trade. So this would be the best. But comparing it to what I had, I did take my trade on that level. Okay, so for my stop loss, what I did was 40 pips. So what I did was I came down here. I saw we are 50 pips down on the lowest point on this current trend. Let's just put that highlighter right there. Okay, on this level right here. Okay, so I just put my stop 10 pips above, 10 pips above, so 40 pips. So basically, essentially, if market breaks this point, I am looking to get out of this trade. It adds up to the confluence of this particular point, which I did speak about earlier on already. Okay, so exactly this point that I did speak on the M15 time frame. Okay, so we have that for this particular trade. So let's to cut out the confusion, we're going to put this that way. And then for this particular trade, my stop loss was just right below this level. So let's go back on the time frame that I actually want to place my stop loss on, right down below this point. Okay, so we have 20 pips. Okay, 23 pips. So I'm just gonna go down a few pips, about 30 pips, and then that is my stop loss. So what I can essentially, as you guys can see, it does, sorry, it is the same, almost the same as what I did have on my trade. So if I was to take off this trade off, excuse me, if I was to take this trade off, I believe it should be much clearer. Okay, so probably stop loss somewhere down here, but the best place to put a stop loss would have been down here. Now let's compare that to my actual trade that I did take, and then I guess we can do a little bit of analyzing. Okay, so we did have that stop loss somewhere here. Okay, and then I believe my stop was about 30 pips, so that does add up, and it is similar to what I did have. And then you guys can see that. So this was my trade. So anyway, this was my trade for today. If you have any questions, drop it down in the comments below. Support the channel, like, comment, subscribe. Tell me how I can better my videos. And yeah, I appreciate all you guys. Thank you for tuning in. This is Cave Trading, and catch you guys on the next one.